Welcome to Economics for Students. In the previous video, we have discussed some important national income aggregates. In this video, we will learn some more identities like private income, personal income and personal disposable income. Private income includes only the income of the private sectors. It includes both factor income as well as transfer income. So, private income is the income of the private sector obtained from any sources, productive and otherwise, and the retained income of the corporation. Private income is equal to net domestic product accruing to the private sector plus net factor income from abroad plus interest on national debt plus current transfer from government plus current transfer from rest of the world. Now we will explain all the components of private income one by one. First, what is net domestic product accruing to the private sector? In the economy, there are two sectors, private sector and public sector. Public sector includes the departmental enterprises like railways, post and telegraph, etc. and non-departmental enterprises like Air India, Indian Oil Corporation, etc. So, to get domestic income accruing to the private sector, we need to deduct these two components of public sector earnings from net domestic product. So, it is part of net domestic income at factor cost, which doesn't include income from property and entrepreneurship accruing to the government departmental enterprises and savings of government non-departmental enterprises. Therefore, net domestic product accruing to the private sector is equal to NDP at factor cost minus income from property and entrepreneurship accruing to the government departmental enterprises minus savings of non-departmental enterprises. Another component of private income is net income from abroad. It is already shown in the previous video and discussed in detail. It is the difference between income received from abroad and income paid abroad. The next component is the interest on national debt. It is the interest paid by the government to the private sector on loans, so it is to be added to the private income. Other two components of private income are current transfer from abroad and current transfer from the government. Both include all unilateral incomes such as charities, gifts, etc. received by the private sector. Personal income. Personal income is the total of all current income received by households from all sources. Personal income is the income actually received by the households in the form of factor income and transfer income. Here, the factor income includes rent, wage, interest and part of profit which is distributed among the shareholders, that is dividend. Some part of the profit retained by the firms which is called undistributed profit and part of the profit which is taxed by the government called corporate tax are not included to personal income. So, personal income is equal to private income minus undistributed profit minus corporate tax. Personal disposable income. Actual income which can be spent on consumption is called personal disposable income. It is the income remained with the individuals after payment of all taxes and other miscellaneous expenses. For example, personal income is rupees 10,000. After deducting 10% of tax, that is rupees 1,000, personal disposable income is rupees 9,000.